Have you ever wanted to know the difference between a mortgage broker and a banker? Hint, there is a big difference, and I will explain that in today's video. Hey everybody, welcome to my channel. I am your host, Leo Landaverde, commercial lender and real estate investor, helping you increase your wealth. Real estate will always be the #1 vehicle to increase your net worth. So if you're ready to learn more about real estate investing and how to secure the financing you need to acquire those real estate assets, then subscribe to this channel and don't forget to hit the bell and you'll be notified every Thursday when a new video comes out. Okay, so if you're looking for a home loan today, your choices are gonna be overwhelming. Don't believe me? Go to your Google search right now, bring up your Google page and just type in mortgage lenders in your city or state. So I did this. I did myself. I did mortgage lenders in California because I live in California. And the search came back with 633 million results that come up. Now, if I pull it 2 days from now, it'll be more. So how is that for information overload? So what are the main difference between mortgage brokers and bankers? So what I'm gonna do today is I'm gonna explain to you on each what are the pros and the cons to make it easier for you. So are you ready? Let's do it. So banks, pros. Number 1, banks lend their own money. Number 2, banks do in-house underwriting. What does that mean? Is that they don't outsource anything. They have a team of people that are actually looking for trying to approve your loan in-house, to have a credit department that a bank, and have people whose sole job is to look at your W-2s, your bank statements, everything to make sure that you have the ability to pay for the loan. Because in the end, the bank is gonna give you money so you can buy a house, and then they're gonna secure that loan with the property that you're buying. So they are very judicious in their in-house underwriting, right? I'll get to that in a second. Number 3, banks typically do better pricing. Now, not always, but for the most part, they have better pricing on your loan. So chances are that you're gonna get a lower interest rate on a 30-year fixed or a 15-year fixed mortgage. And there's a lot of products out there that I'll be on the scope of this video. But suffice to say, better pricing. Number 4, banks tend to do better with jumbo loans. And I have some description below as what the difference is between a jumbo loan and and one that is not, and there's usually higher limits, and the guidelines are set by Fannie Mae and Freddie Mac, and you can read about those in the comment section below. So now let's go to the cons, right? What are they when dealing with with a bank? So number 1 is bank assumes you know the terminology and will speak banking lingo to you, assuming that you know what they're talking about. So if you ever talk to a banker, if you go to your local bank, say you're working with Wells Fargo, and you walk into the branch and you talk to a mortgage officer, they're gonna talk to you in their banking legalese, and they really expect you to know everything they're talking about. That could be a drag. It's like calling the IRS on your own and trying to speak to an agent and trying to sound as eloquent in tax law as you can. Think about it, right? Your chances are going to be little to none that you're going to understand what they're saying and the IRS saying when you go to a bank, unless you've done a bunch of loans. Number 2, if bank does not approve your loan, you have to start all over again with another bank. Keep in mind that when you're going to a bank, you're going to each bank separately, and each bank is going to pull your credit report. And guess what happens every time somebody pulls your credit report, your FICO, the 3 main bureaus? Every time somebody has an inquiry, it's bound to lower your FICO if it happens multiple times. So if somebody pulls your credit 10 times, it's gonna definitely lower your credit score. And part of the lending matrix is having the highest possible score. So do you see why it's so frustrating when you get turned down by a bank and you have to go to another? You have to start all over again. All right, keep that in mind. Number 3, you're stuck with their loan products. Now, some banks have great products and some don't. So you have to know what you choose. So you have to do your research and figure out what loan programs they have that are best for you depending on your financial situation. So if you're self-employed, some banks don't like self-employed people. If you have very little down payment, some banks are going to want you to have, larger down payment. So if you want to ensure your chances of getting a deal with a bank, your FICO has to be at least 720, you have to have 10% down, and you have to have plenty of back-end ratio and cash reserves. You have to have great ability to pay, which is unrealistic for most Americans. Okay, number 4, you're stuck with their guidelines. They have an underwriting department, a credit department that is going to dictate. So if you don't fall within that box that is their underwriting criteria, good luck, you're out, and you're going to turn you down. Number 5, your choices are limited. I already spent a bit of time on that. They tend to be more conservative. Number 6, they take lesser risks on borrowers. Think about it. We just came out of a worldwide pandemic where everybody is a little antsy. Now, a lot of people lost their jobs, right? So some people had to lose their homes. So some banks are sitting with REOs, properties that, the real estate owned properties, but actually they had to take back from borrowers. So naturally, most banks are gonna be a little weary of lending money right now. So keep that in mind. And also, it may take longer. I've heard of underwriting departments taking 6 weeks to get a loan approved. So if you have a need to close your purchase price on your home in 5 weeks and they're gonna take 7 weeks, you're gonna have a hard time. And you're gonna have to have some explaining to do to escrow, which may hurt your ability to get a house. All right, so enough of that. Now, let's go over to mortgage brokers, pros and cons. All right, pros. They act as a matchmaker, getting you, matching you with the best lender. So the reason why some people go to a mortgage broker is rather than going to one person, they're kind of like, and then get turned down and go to another bank. They act kind of as a one-stop shop. They usually have great mortgage brokers who have relationships with literally hundreds of banks, and they will understand based on your situation, your financial situation, where to put you with, so you're gonna minimize your chances of getting turned down. That's very important. Number 2 is speed. Speed. Things tend to go a little faster when you're working with a broker. Number 3, as I said, they're a one-stop shop. Right, so you may be able to get everything done, and they always have a plan A, B, and C. How do I know that? Because I have worked with brokers, and I don't remember last time actually I went with a bank, but I'll digress. Number 4, if the mortgage broker, pay attention, if the mortgage broker is also a mortgage banker, they may have the ability not only to act as the middleman, as the one-stop shop, they may actually be a correspondent for a larger bank and be able to have a warehouse line to lend you money. What does that mean? Some mortgage bankers have relationships with large, federal institutions in which they can actually, have $100 million warehousing line in which they can do conventional loans and later sold in the secondary market. So they can actually write you the check. It is something for you to think about. Number 5, they will coach you through the process because they have a vested interest in your success. Your loan doesn't get funded, they don't get paid. Now let's go to the cons. Number 1, they're not a direct lender. I said that some are, but most aren't. So if you really want to be the best of both worlds, you probably want to go with a mortgage bank that happens to be a broker. But most brokers are not direct lenders. They do not lend their own money. They actually act as the middleman between you and the actual lender, between you and the banker, the bank, the lender, who is actually gonna give you the money to buy your house. Some brokers have given that disservice to the industry, and they have made false promises in order to get your business. Number 3, they're not the final decision maker on your loan. They work with the underwriting departments to make sure that your loan gets approved, but they really don't have a say. So if in the end they submit you to 2 lenders and they both say no, then you're really stuck. And last but not least, you will pay more money at closing because of a broker commission fees. Now, typically, broker commission fees can range anywhere from 1 point, which is 1% of the money borrowed, to 2 points, depending on your situation, depending how challenging your situation is. Now, as a reference, So if you're getting a $300,000 loan, 1 point is $3,000. That'll be actually added as your closing cost. You will be paying for that. Now, my opinion is you gotta know your situation before you decide, because if your credit is, if your FICO is 720, you've been employed, you've been with the same company for 20 years, you make great money, you have hardly any debt, and you have 10% down or more, you can basically, anybody will approve you. So you don't really, if you already know that, if you have a great working relationship with your bank of years, and you know the lender, and you know the underwriting department of those small community banks, then I would say you're probably best served to stay with your bank. However, if your situation is a little more challenging and you haven't been employed as long and you have less of a down payment, or you may be a VA veteran and you want to go with a VA and you have 0% down, all of those things considered, then you'd be best served going with a mortgage broker. In the end, you decide. You know your situation better than anybody. So I hope that helps you. And this is a little bit about mortgage brokers versus bankers. Please watch my next video. Thank you. Hey, if you have any questions, please comment below. I respond to all comments in my channel within 24 hours. And if you have any other ideas for videos that I should be making, please let me know. I just love the interaction in our community. Thank you so much. If my video was helpful to you, great, thank you. Then you're really gonna enjoy these 2 videos. Watch them next. And if you haven't done so already, please subscribe to my channel.